Warren Buffett, one of the world's most legendary investors, has never been a fan of Bitcoin. In fact, he called it red poison squared and said it has no real value. Is he right? With Bitcoin revolutionizing the way that we think about money and gaining adoption from massive institutions like BlackRock and even countries, it's hard to ignore the other side of the argument. And that's why in this video today, we're going to dive deep into Warren Buffett's claims, explore why he believes that Bitcoin is worthless and whether there's any truth to his claims or if he's missing out on something big. So stick around because this is going to be a very interesting video. Before we dive in, let me ask you one quick favor. If you enjoy watching videos like this one where I break down complex topics in the world of investing in crypto, then smash the like button and subscribe to my channel because I'm going to be posting regular videos just like this one to help you to maximize your gains in the crypto market. Okay, let's dive in. So Warren Buffett, is he right or is he wrong about Bitcoin? So here is a quote by Warren Buffett. Warren Buffett said, "I wouldn't buy all Bitcoin in the world, even for $25. It has no value." So yeah, this is actually this quote already reveals sort of one of the big things that Warren Buffett is not understanding about Bitcoin. But yeah, we'll dive deep into that in just a bit. So here Warren Buffett says that the cryptocurrency is red poison squared over the weekend. All right, so he's very publicly announcing that he is anti-Bitcoin. Now, he believes that Bitcoin is nothing more than speculation. And in the world of investing, there's something we call the greater fool theory. What is a greater fool theory? That is, let's say that we are at an auction and I am bidding $300 for a painting and you're bidding $500 because you actually believe that the price of the painting could go up in value to $600. So still you believe you're buying something good. As long as there's someone that believes that the price of the item that you're bidding on could appreciate even further in value than the price that you're bidding, then it's a good bid. Then at least you're happy. So if someone is bidding $300, we call that the fool. They're already willing to pay a high price. But this guy willing to pay $500 is a greater fool because he believes the price will go even higher. So he's willing to bid more. Now, a great example of the greater fool theory in real life, that is the crypto market. So in the crypto market, there's so much speculation. For example, meme coins. I made a video about this not that long ago. So meme coins are similar to Ponzi schemes. You know, everyone brags about how much money they're making with a certain meme coin. So this creates FOMO with a next layer of investors who then get into the meme coin, which also start to brag to the people around them how much money they're making with a meme coin. And as long as they keep attracting more capital into the meme coin, the price can go higher. But as soon as people start to lose belief in the coin and people start to sell and dump, it will trigger a cascading effect. And oftentimes these coins will go to zero over the long term. So that's what happens when you don't find the greater fool. And that might be why Warren Buffett is calling Bitcoin red poison squared, because it's just attracting these greedy little investors that are hoping to make more money by investing into Bitcoin. And then ultimately burn their hands. Another great example of a greater fool in real life is not that long ago there was an auction of a banana taped to a wall. Just simply a banana taped to a wall. And crypto entrepreneur Justin Sun, founder of Tron, he was also present at this auction and he actually bid $6.2 million for this auction. And then when he won the auction, when he won the bid, he actually walked towards the wall. He took the tape off and he ate the banana. I think that's hilarious. For him, it was probably a publicity stunt because, yeah, he made headlines. So maybe it was worth the 6.2 million. But in any case, he was the greater fool. He was willing to bid the highest amount of money for this banana taped to a wall. So the question is, are we all just bidding to are we all just outbidding each other to get a banana taped to a wall, or is there more in play with Bitcoin? So Warren Buffett. Who is Warren Buffett? Well, Warren Buffett is one of the most wealthy people in the world. He has amassed a fortune. He is worth $143 billion, and he has already given some of his net worth or some of his wealth to charity. So yeah, he generated more than this. And this is what is publicly known. There might also be some off the records assets that he has that people don't know about. But at least this is an estimate of what Warren Buffett is more or less worth. It's insane. He's in the top wealthiest people in the world. So for sure, if someone made a lot of money in the past or is still making a lot of money, then they probably know something about the world or finances, investing that we don't. Because he actually made his money investing in the stock market, investing in the financial markets. So I believe success leaves clues by studying great people like Warren Buffett, and I've read many books written about him, many interviews, shareholder letters of Berkshire Hathaway, his company that he's managing, which invests in other publicly traded companies. So yeah, most people lose money in the financial markets because they have no clue what they're doing. They're simply speculating, gambling, and ultimately lose because they have no game plan, they did no research, they've got no clue. But Warren Buffett apparently has created some kind of system, strategy, principles, which has allowed him to grow his company, Berkshire Hathaway, to over $1 trillion valuation. So he definitely understands something. So here you see everything in context. So Berkshire Hathaway, his company, his investment company, is worth just a little bit below $1 trillion today. And it is ranked the 14th most valuable asset in the world. Bitcoin, interestingly enough, is the seventh most valuable asset in the world. So it's more valuable than Berkshire Hathaway. So that's an interesting observation for something that has been called red poison squared and something with no real value. It's more valuable, or it's almost twice as valuable as his company, Berkshire Hathaway. Maybe he's a bit butthurt, or maybe there's other reasons. We'll find out in just a bit. The most valuable asset in the world is gold, with a market cap of 18 trillion right now. That was just meant to put everything into perspective. So what is Warren Buffett investing in with Berkshire Hathaway? Well, let's have a look at his portfolio. So Warren Buffett, he owns a large chunk of his holdings is in Apple stock. He recently sold off some Apple stock. American Express, Bank of America, Coca-Cola, Chevron, Occidental Petroleum, Moody's, Kraft Heinz, and some other companies. So in general, if you look at these companies, they're quite boring companies. American Express, Bank of America, Coca-Cola, Chevron, some oil and gas company. They're quite boring. He's not investing like Cathie Wood in disruptive innovation, biotech, AI, self-driving cars, machine learning, those kind of things. No, that's not what Warren Buffett is investing in. Actually, I have studied Warren Buffett so much that I have created my own Warren Buffett stock picking checklist. And I'm sharing this with my paid customers of the Early Retirement Club, my investing community, but I'm now going to share this for free with you as well. So this is sort of the checklist that Warren Buffett walks through whenever he decides whether or not to invest in a company or not. Just this checklist alone is a super valuable takeaway from this video. So pay close attention because success leaves clues, but it will also put you in the right frame of mind to understand where Warren Buffett is coming from. So first of all, Warren Buffett's rule is to never invest in stuff that you don't understand. So if you can't explain in very simple words what a company does, then you shouldn't invest in it, because the essence of a company should be very simple. It shouldn't require any crazy buzzwords or complex jargon. You should be able to explain very simply to anyone, your aunt, your neighbor, your nephew of 8 years old, how the company works. For example, Coca-Cola is addictive sugar water. That's it. American Express is a credit card company. Bank of America, they make money through bank fees, processing fees, loans. So it's that simple, guys. The company has a track record of delivering consistent results. So whereas in the crypto market, in general, Bitcoin was invented 15 years ago. So it has a very short track record, whereas many of the companies that Warren Buffett is investing in have decades and decades of track record that can be analyzed and observed. The company has a product or service that's not easily replaceable by competitors. For example, Coca-Cola. So many people around the world are addicted to Coca-Cola and are attached to the Coca-Cola brand. For example, my brother is a very big fan of Coca-Cola. Whenever someone in a restaurant tells him like, no, we only have Pepsi available, he's like, oh no, never mind, I don't want it. So somehow he's very attached to the brand as well. Warren Buffett invests in companies that pays dividends to shareholders because these are companies that focus on maximizing shareholder value. So, for example, Tesla is a company that reinvests a lot into its growth. So it's reinvesting its profits time and time again. That's not a company that Warren Buffett would invest in. Warren Buffett likes to invest in companies with established business models like Coca-Cola, which focus on maximizing revenue, minimizing costs, so that there's a profit left at the end of the year. And then this profit is partly redistributed to the shareholders in the form of dividends. The management of the company is completely transparent with its shareholders, even if it made what am I missing over here? Even if it made a mistake, probably. Yeah, well, even if it made a mistake. So for Warren Buffett, one of the biggest red flags of a management team is if they're lying about certain things. Because if you're lying about something small, then you will probably lie about something big. And this is how fraud comes into the system. And you don't want any fraudulent management teams because they will literally destroy the company and ultimately cause shareholders to lose a lot of money. The company should have a great cash flow. So meaning a lot of, money comes in, they're making a lot of profits every single day, every single month. So it's a healthy company. The company must have a great profit margin. So again, all focus on cash flow, profit, healthy balance sheet. The company should be bought when it's trading at a discount. So when it has a very cheap valuation because of, for example, a market crash. So Warren Buffett is known for his famous quote, be fearful when others are greedy, be greedy when others are fearful. So in times of market crashes, he buys up great companies at big discounts. And he buys companies that will exist even in 100 years. So for example, Coca-Cola, Tesla, let's use Tesla again as an example. Look, I absolutely, completely admire Elon Musk. I think he's an amazing guy, super innovative, but oftentimes innovating companies or disrupting pioneers, even though they create a whole market, like Nokia created the mobile phone market, they are oftentimes not the ones that will dominate the market over the long term. Now we've got Apple and Android, which are basically dominating the smartphone market and not Nokia. Similarly, you could argue that there's a high likelihood that Tesla will also be disrupted. In fact, there's already some Chinese companies that are getting very close to Tesla's market share. They simply looked from a distance. They saw, all right, this is working well for Tesla. Let's see how we can make it better, faster, cheaper. And now they have a really great competing product. So what Warren Buffett does is he doesn't want to invest into pioneering companies because he doesn't believe that those will exist in the next 100 years. And if you look at these boring companies like Coca-Cola, Bank of America, American Express, according to him, there's a very high likelihood that even in a few decades or 100 years, those will still exist. So this will put you a little bit into the frame of mind of how Warren Buffett looks at different companies. Now, let's look at how we can value a business or an asset. There's basically 3 different approaches, which we're going to then run on Bitcoin. So the first approach is the income approach, basically the intrinsic value. And when we're looking at the income approach, we're looking at the discount-free cash flow. or the residual income. Basically, we're looking at how much profit is a company making on a yearly basis. Now, what we then do is we take an example. So the profit of the company, or in accounting terms, the earnings before income tax, depreciation and amortization, is around 2 million. Then we put a multiple on top of it, depending on what type of company. If it's a tech company, it will be a higher multiple. If it's a boring brick and mortar company, it will have a lower multiple. But let's say on average, we use a multiple of 5. On the stock market, it's on average 15 to 20 times the EBITDA. But this will give you an enterprise value. So you take the EBITDA, so let's say the profit of the company, and you put a multiplier on it based on the quality and the industry of the company. That will give you an enterprise value of $10 million. That's how a company is valued. Now, the whole problem with Bitcoin is there is no EBITDA. It's not a company that's generating cash flow. However, what is possible is that instead of EBITDA, you look at the transaction fees per day. Because what is Bitcoin? Bitcoin is not only a digital currency, it's also a payment network. So the payment network, all of the miners are processing transactions on the network and they're earning fees. So when I took this screenshot, miners were making around $770,000 per day processing transactions on the Bitcoin network. So that's around $20 to $30 million per month for processing those transactions. So even though there is no clear EBITDA, you could look at the transaction fees that Bitcoin miners are making, and you could approach that like a company and see that as a free cash flow coming from an asset, and you could put a multiple on top of it to value the Bitcoin network. So although it's not a very traditional way of doing it, we can still run this kind of valuation method on Bitcoin. So according to this valuation method, and depending on what multiple you would put on the cash flow generated by the miners, you could come up with a valuation for the Bitcoin network. Now, the second approach is the market approach. So what do we do? Whenever you're buying a company, you're basically looking at comparable companies on the market and seeing what they're worth or what the latest transaction value is. Similarly, when you're buying a house, you're also going to look at what are similar houses in my neighborhood that have recently been sold, and that's roughly the value of my house as well. So that's when we compare it to other companies or precedent transactions. So the only thing that we have with Bitcoin is we could compare Bitcoin to gold. So right now, Bitcoin has a market cap, meaning a total value of around $2 trillion, and gold has a market cap of $18 trillion. But when we look at the properties of Bitcoin versus the properties of gold, then we see that Bitcoin has a lot similar characteristics and properties than gold. For example, it's very scarce. It has a limited supply. But Bitcoin has a hard cap of 21 million Bitcoin, whereas gold can always be mined at a higher price. Some are even talking about sending rockets to asteroids to mine gold. That can be a very expensive undertaking, but yeah, it is possible to create more gold because these asteroids could have gold in their core. The only downside is Bitcoin has a shorter track record of only 15 years and gold has a long track record of thousands of years. Then gold is very difficult to transport. Let's say that you have kilos of gold, then you need to take a wheelbarrow, you need to roll it over the street, you need to go to an exchange to change it for money. It's a very big risk because you could be robbed on the street. Whereas with Bitcoin, you can put it on a ledger and you can travel all around the world and no one would know that you're carrying a large amount of money with you or a large amount of wealth. Also, gold is very difficult to divide into smaller components. You would need to melt it at really high temperatures, which require you to have a special furnace which can generate that temperature. You need to have special equipment, knowledge. So it's very difficult to break gold down into smaller components, whereas Bitcoin can be broken down into satoshis, which are 100 millionth piece of a whole Bitcoin. So you can break it down in very small parts. Bitcoin, very decentralized, very open, transparent. You can see everything that's happening on the Bitcoin network. Gold is still a little bit of a manipulated, not transparent market. Both are very durable, meaning that it could last many decades, hundreds of years, thousands of years. The downside of Bitcoin is because it's such a young asset class, it's still more volatile, whereas gold is a very mature asset class, so it's less volatile, but it can still get volatile. So what is the point that I'm trying to make? Bitcoin is often compared to digital gold. So when we need to go out there on the market and we need to compare Bitcoin with something comparable, then gold is the closest thing that we can get in terms of a store of value, which is the main use case of Bitcoin. And you could argue that Bitcoin has a lot better properties than gold. So that would value Bitcoin somewhere around $18 trillion right now. So that's another valuation method that we could release on Bitcoin. Now let's talk about another way of approaching Bitcoin's value, and that's a replacement cost, or the cost to build Bitcoin. So maybe you know this, maybe you don't know this, but one of my main companies is called Epic Mining. What we do is we make Bitcoin mining easy, simple, and accessible for investors worldwide. What we do is, we buy up hundreds of machines every single month. We ship them to our mining facility, and then we manage everything for our clients. So right now we're managing 80,000 mining machines. And 80,000 mining machines is just all of the machines in our mining farm. Worldwide, there are hundreds of thousands of machines, and these machines can cost somewhere between, let's say, 3,000 all the way up to 15,000 per unit. So we're talking about hundreds of billions or even trillions in order to buy all of those machines, replace them to create a new Bitcoin network. So even with this approach, it is possible to put a value on Bitcoin. Now, here is my take. Warren Buffett, and I respect him so much, Warren Buffett called Bitcoin red poison. I believe that Warren Buffett simply did not understand Bitcoin. I know that Warren Buffett is someone that does his research and really knows how to pick great companies and buy great companies at really great discounts, at really great moments in the market. However, Warren Buffett has always been very reluctant to investing in technology companies. One of the first big technology companies, and you could argue that American Express is maybe also a technology company, but one of the first big technology companies that Warren Buffett invested in was Apple. At that point, it was like, wow, Warren Buffett is investing in a tech company. That's not really his domain. He often stays very far away from tech companies. So he has like a reverse bias towards tech companies. First of all, maybe for me, because I'm a millennial, it's easier to understand Bitcoin, the Bitcoin network, the technology. I'm doing my best to educate other people to also understand how it works. I've also educated my parents who are a bit older. They understand now also how Bitcoin works. So even though you're older, with the right research, the right guidance, the right conversations, you're still able to understand it. Although I do feel that Warren Buffett, at this point, at his current age, I believe he's like 90 or something, he just doesn't want to touch those new disruptive innovations anymore. Also, there's another reason why Warren Buffett might be against Bitcoin, and that's the fact that around 12% of his entire holdings is a bank, the Bank of America. And you know that banks generally don't really like Bitcoin because it tends to undermine their authority, because banks like to control everything. Nowadays, when I go to the bank, I need to ask them for permission to send my own money. It's my money. Why do I need to ask the bank for permission? They're becoming so controlling over what we can or cannot do with our money. And Bitcoin, offers a really great alternative to that, because Bitcoin is a decentralized peer-to-peer transaction network. So I can freely send my Bitcoin to whomever I want without requiring permission from anyone else, as long as there are Bitcoin miners that are processing the transactions on the network. So it's a censorship-resistant system, meaning that no one can come in and say, hey, Mitchell, or hey, whatever, you cannot make this transaction. You first need to do KYC, or you first need to provide invoices, contracts, whatever. Now, finally, there's one other conclusion which I want to make from this quote. So here within this quote, Warren Buffett is saying, I wouldn't buy all Bitcoin in the world for $25. It has no value. See, this shows that Warren Buffett doesn't understand Bitcoin, because the whole point of Bitcoin is the fact that it's decentralized. So meaning that the ownership of Bitcoin is spread across many different people. Miners are not just one company that's mining Bitcoin. No, it's many different individuals, companies, organizations that are participating on the network. And if you would own the entire Bitcoin supply, there would be no value, because then it's not centralized. Also, when you are the only participant on a financial network, there would be no one else to send your Bitcoin to. So you would not be able to transact with other people if you own all of the supply. So again, that shows that Warren Buffett didn't do his research on Bitcoin and didn't understand the power of a truly decentralized payment network, where there's many different individuals and companies participating on the network. And it's like money for the people, created by the people, managed by the people. So that's probably something that Warren Buffett didn't understand. And even if you look at traditional ways of valuing companies, then Bitcoin definitely has some value to it. In fact, you could argue that it could be equally valuable to gold, or maybe even more valuable, as it has better properties. So I'm really curious to hear your conclusion in the comments below. Does Bitcoin have value, or do you believe, just like Warren Buffett, that there's no real value to Bitcoin? Then it's just one big Ponzi scheme, and that it's better to get out now that the price is high, because it has no real future. So I'm really curious to hear your thoughts. And if you enjoyed watching this video, again, do me one quick favor, smash the like button. For me, that's good feedback to know whether you got good value out of this video or not. That way I know what kind of videos I should create more of and what kind of videos I should avoid in the future. And if you haven't done so yet, also make sure to subscribe to my channel. My whole goal with this channel is to help you to position yourself for maximum profits in this crypto market. And I'm going to be posting regular videos to help you to achieve that goal. All right, thanks for watching. Take care, peace out, and I'll see you in the next one.